Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been helping people take delivery of precious metals and find storage options for decades. They have also helped thousands of investors with their precious metals IRAs. Call ICA today for your free portfolio review at 800-525-9556 or download your free report online by clicking the link in the video description to learn how you can double your gold and silver ounces even within an IRA.
Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. And this is more of a news week than a market move week, especially in the precious metals, although we do have an interesting point in the Dow to get to in a few minutes. So as usual, we'll start out the show looking at the gold chart.
Yeah, let's jump into the technical analysis of gold, Miles, because we are seeing somewhat of a contained volatility, but still nonetheless, like this morning, seeing a low of 1830 and yet pretty quick bounce right back up to 1850. Let's look at not only the technicals, but I want to put you in a corner a little bit and see why you think we got that bounce.
Sure. We're looking at a bounce going back to 1802, back on January 17th, leading into the inauguration. And that actually broke us below, came back up and retested, and it looked like it might actually hold below that short-term 382 fib that we've had drawn on our charts for a while. However, if gold on this second attempt back down, which you're alluding to here on Wednesday, got down to about 1830 and popped back up. If we're looking at that being a short-term low, and now us pushing to maybe a higher price, 1885, 1890, maybe 1900 over the next couple weeks, we could be seeing gold, like we suggested, possibly did put in that low, market low back on November 30th last year, and we could be seeing some short-term stair step up to where we're going to retest those old highs in the mid-1900s. So next couple days should be pretty telling in gold because we're playing right around that 382 fib, and it looks like we might be starting to build some upwards compression towards a potential breakout one way or the other. So you know me, I tend to remain bullish until I'm proven bearish, and I tend to remain bearish until proven bullish. Gold has been bearish since we peaked back in August. So my argument and my hope is still that we see a little bit more downwards movement in gold. And the reason for that is more of a political driven reason than anything. I want to buy at a lower price, and I want to do so because we're looking at some pretty substantial spending packages on the horizon. And there's only two places that money comes from. Part of it comes from taxes, that covers almost nothing. And then the rest of it comes from inflation, and that's going to mean over the next couple of years, substantially declining value in the US dollar, and therefore expect to see things like gold or Bitcoin increase. And I know we talked about that a week ago with Janet Yellen coming out and specifically listing Bitcoin as a potential target for the Fed. So we know the writing's on the wall. We know what they expect to do with the US currency and with the inflation rates and with government spending going forward. And we know how markets like gold are going to react to that. So I would argue buckle up over the next couple of months especially, and let's see how the dollar specifically, as well as the markets as a whole, which we are going to look at the Dow here in a few minutes, how they respond to the new Biden administration and the expected spending plan that we think Congress and the Senate are going to put forward.
Yeah, great points, Miles. And the Fed meeting today, the release of the minutes and the speech by Powell reiterated another tactic, and the other tactic is interest rate manipulation. And so they didn't raise rates. They felt that the rates could remain unchanged, but that's no longer the discussion like it was through all of 2020. Are the rates going to go up? No. Now the conversation is, are the rates going to be lowered? And there's a lot of expectation now that we will get 1 to 2 interest rate reductions this year. So to offset some of the inflationary spending, the stimulus that you're talking about, infrastructure packages where there's an additional multi-trillion-dollar spending intention, those are all things that are going to drive up debt. And if they do raise taxes, they've got to offset that stagnation by lowering interest rates even further, continuing to drive borrowing, continue to drive refinancing, house purchases, that sort of thing. So all that being said, silver really thrives in that type of an environment. And quite honestly, it wouldn't surprise me one bit if we didn't see a gold-silver ratio trade this year because of that, because I think silver, much like it essentially doubled gold's performance last year, I think silver could do it again. And with that being said, will you take us into the silver technical analysis this week?
Sure, Tori, and how the heck could I have forgotten about the interest rates? So thanks for catching me on that. I guess there are three things the Fed can do, although it does all kind of look like the same stick they're swinging. Yeah, and I'm glad you bring up the ratio trade between gold and silver, because obviously we've been watching this very closely for a number of years as it's been extending up to 70, 80, 90. Let's certainly not forget what happened last summer when everything kind of exploded and we saw the highest ratio trade possible in history, making the bold assumption that you could actually buy at 120 based on where the premium on coins were. But now with that ratio down back around 70, which is one of our lines in the sand as far as above or below, and it is compressing down towards that 70. So I agree, even from a charting perspective, it does look like the gold-silver ratio may start to favor silver, finally playing catch-up, finally starting to outperform gold. And we know back when this happened between the 2008 to 2011 market crash and recovery, silver turned around very quickly. In fact, the majority of the movement silver made only took about a 9-month period. So while it may sound to our listener like a very bold claim to say that silver and gold could have a pending ratio trade on the other side of this year, it's certainly not impossible. So I'm glad you bring that up. So looking at the price action in silver, I think that definitely adds a little bit of credibility to the argument. I mean, silver certainly had a reversal back down with gold after the August highs when both metals put in their high price for 2020, but silver's fall was much more shallow, and while gold has been stair-stepping slightly down, which is why I mentioned a moment ago I'm still arguably short-term bearish in gold, silver, on the other hand, just keeps putting in higher highs and higher lows, and it looks like we could be stair-stepping back up to test those August highs up around $30. Now, there's a lot of room between where we're at now on silver price and where the floor, the current trading floor is, which would put us, if we came down, somewhere in the mid-22 range. But there's a couple price levels, like around 24, where we found footing back on January 18th, again, right before the inauguration. And silver has put at least a short-term higher high in, and we're seeing another potential rising floor today on January 27th. So it is possible that silver could be making that type of breakout move. It would not surprise me. Silver does gain popularity very quickly, and people, I think, who are looking at some of these markets for the first time are thinking, how can I get into gold without paying $2,000 an ounce? And Tori, I think we've got a good answer to that. You buy silver when the ratio makes sense.
Yeah, I totally agree. I mean, the other thing that might work is we get the Reddit group to jump in on silver and work against the ultimate JP Morgan silver short.
Right. I promised myself I wouldn't talk about GameStop today, so I'm not going to.
Okay. Well, it would be nice to see that whole group jump onto the silver bandwagon and we'll get our ratio trade. But no, that is really good information. And surprisingly, though, you did see the dollar rally today, almost 3/4 of a point. We were strongly above 90, almost to 91, before it ended up turning back down just slightly. But subjectively, it feels like we should see a continuation. And what I'm going to remind the listener about is the dollar index matters far, far less than the purchasing power of the dollar. Just because you see the dollar index rally doesn't mean that it's healthy. It doesn't mean that that's deflation. What it means is that relative to other currency policies, monetary policies, the dollar may not have been as weak that day, but ultimately it's all about what does your dollar buy over the time period that we're talking about, and that's why you hedge in the physical precious metals. It's that loss of purchasing power.
Adding to the argument, I think it's worth looking at the platinum chart because platinum keeps taking these steps up into the pricing, kind of the previous high before we went into the real strong bear market in platinum back in 2016. Now we're looking at pricing up in the mid to high 1100s. Platinum pushed against it back on the 8th of January. We talked about that a week or two ago. We've made now a third step upwards and put in a slightly higher high here the end of last week on the 21st. So you're seeing kind of a 3 drives pattern up into those old market highs from 4 years ago with some compression. So my argument would be 3 drives pattern, RSI divergence, it's in compression, it's into a pretty significant price action high. I wouldn't be surprised to see platinum actually turn down for the next couple weeks, maybe month or so. I think that's going to potentially, platinum being more of an industrial metal, that would potentially coincide with an equities market turn down, which we'll look at here in a second, which is also possible. So be on the lookout for an opportunity, not just the gold to silver ratio, but also the platinum to gold and platinum to palladium ratio. We may get some really good pricing one last time in platinum. So if we were to see platinum take a short-term plunge back down, just a little reloading period over the next couple months, both the 50% line at around 875 and the 618 fib down at 806 line up nicely with some previous price indications and price activity going back to June of last year and then September through November. A lot of price action at that 50% line. So if the trading ranges hold, then yeah, it would be nice to see platinum come down, and that's going to be a heck of an opportunity. Now, the reason I mentioned platinum kind of alluding to what the Dow is doing is because the Dow did something today, Wednesday on the 27th, that I believe is worth mentioning. You know, for the last, really since middle of November, we've been watching the Dow kind of just sort of slowly within a channel trade sideways, even though sideways has been tilted upwards, but no real breaks up, no real breaks down. It's just stayed within this pretty tight trading range.
You wouldn't know that from the media constantly pointing out all the new highs.
Well, and arguably it's put in what, 1, 2, 3, 4, 5, 6, 7, 8. I mean, it has put in 8 highs in the last 3 months. So they're not wrong.
Just not huge ones.
Yeah, they're not wrong.
Right.
So it just hasn't put any higher highs outside of its trading range. So the floor of that trading range, November 11th, confirmed on January 4th. And here in about 20 minutes today, on Wednesday, the 27th, it's very likely we're going to close below that floor. Now, that doesn't necessarily mean anything except for the fact that I'm going to be watching the Dow very closely over the next couple days. I encourage clients to as well. Keep an eye on the Dow. If we see a little bit more downwards movement, we've got a gap all the way back in the beginning of November to close. I'd expect to see the Dow down around 28.3, possibly a little bit lower. But what I really care about is when we push back up and we get back to this rising floor, are we going to push back up into upwards trajectory, or does the old floor become the new ceiling?
You know, it's such a speculative market for me right now, Miles. I'm not going to venture to guess on that. Today's weakness, down over 600 points, at one point, a strong 2% against all indexes. I feel as if we're long overdue for a downturn, but it goes back to the adage of betting against the Fed. And when you have the minutes like today come out and they say they want to maintain the level of monetary injection or the current monetary policy, that's easy money, and that's stimulus money, and that's driving markets, and it's bolstering confidence, certainly from hedge funds all the way through mutual funds to individual investors. So I'm not going to venture to say, yeah, we're going to correct here at this point. I need further clarity on what the Federal Reserve is going to do and how easy the money is going to be, not only through the Fed, but through the Treasury with Janet Yellen at the helm now.
Well, and no matter what spending package that the federal government authorizes, you have to know there's a couple guys on Wall Street who just expect they're going to get their cut. So I'm right there with you. I mean, regardless of what type of correction we may see, we've been arguing for years based on traditional, natural, healthy market movements. PE ratios, Dow needs to go down. Dow might go to 50,000 before it goes down.
That's right. We need the correction. It's a healthy thing, right? It's just a matter of from what top is it going to correct down to. And I remember 5+ years ago reading that we weren't going to get a major reversal until we hit 30,000 on the Dow. Here we are. But is that the magic number? No. I mean, we could hit 40. We could hit 50. That's what inflation does. And what you have to understand is the currency that you're measuring a stock against is losing its purchasing power. The stock is naturally going to adjust to that, just like what you see with gold. Gold just does it at a far greater percentage And you've seen that all the way back in the Weimar Republic, with their hyperinflation all the way to current days. You will see commodities and equities prices adjust to a declining dollar. It's just the biggest move is going to be, the best protection is going to be in the form of gold.
Or Bitcoin until Janet Yellen says no.
That's right.
Yeah.
That'll do it for this week's Golden Rule Radio. I do want to remind the listener, although we are a precious metals brokerage firm, first and foremost, we love to just sit down and walk through your portfolio with you. So taking 5 minutes on the phone, getting a good understanding for you in terms of your current structure of where are your growth assets, where are your savings assets, where are your precious metals or commodity assets. And once you have an understanding of the total big picture, you then can formulate a plan for 2021 as to how to best move forward, best get restructured in the most strategic fashion for you.
Well, that's going to do it this week for Golden Rule Radio. We appreciate you stopping by. If you liked what you heard, do the YouTube things. Hit the subscribe button, ring the bell. Join us each week for our updates. In the meantime, swing on over to our website at McIlvaney.com. You can find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. And as Tori just mentioned, if you'd like to discuss your personal portfolio with Tori, myself, or one of the advisors here at McIlvaney ICA, give us a call at 1-800-525-9556. Thanks for listening.
Have a great week.